try on clothes for kids because kids change size, and that's why Children's Place done well. Foot Locker, same deal. You got to try them on, and when you have to try them on, that does not make it right for Amazon because feet change in size when you're growing up. So when you look at why Foot Locker and Children's Place have dodged the mall bullet, it has to do with the need to be personal and change and look at sizes.
7 easy money stocks to buy now. Oh, this is a fun video here today, folks. If my mom called me and she said, Jeremy, I want to buy 7 stocks. I can't touch the money for the next 4 years. What 7 stocks am I buying? So yeah, Meta, absolutely easy money stock. Number 6 of 7 up here. This is actually a tie. I put 2 companies in here from the 6th spot because they're actually somewhat similar. They're both retailers. One is Foot Locker, which obviously sells not just shoes, but clothing. I'm a huge believer in this Foot Locker story, and I am actively buying shares right now, and I'm probably not going to stop buying this one anytime soon, okay? Foot Locker stock. It is a value and dividend play, okay? Not a huge amount of risk. It's kind of been de-risked on the price side now at this point in time. Oh, well, folks, the flapjacks got flipped straight onto the floor. Foot Locker, okay? I woke up to see this stock, which is a stock I own in my dividend-only portfolio, down 27%. I saw that and I was pretty in shock, I guess you can say. I'm like, Foot Locker down 27%? Oh, they actually deserve to be down 20+% because this was a complete disaster here. Well, folks, one of my stocks just absolutely collapsed. And I mean, yeah, an obliteration. Foot Locker's down 30% today. 30 flipping flapjack in percent. Just absolutely decimated. Foot Locker's an important dividend stock for me. It's a position I'm just getting wrecked on right now. Down $9,200 on this position today alone after this massive crash was a $6,300 move down, right? Just epic.
Financial Education's Easy Money stock crashed 35%. How low can Foot Locker stock go? Nike stock versus Foot Locker stock.
Should you buy Nike right here? Buy it right now.
I think Foot Locker's a buy. I'd rather do that because I like the domestic more than I like the international. Foot Locker been hurt by the mauling of America, but I still think that I buy direct-to-consumer Nike sales, but Foot Locker's come down a lot. I know people hate the mall, and the mall's despised, but I think that Foot Locker's a way to play it.
Sneakers deflation season.
Anything special for sneaker season?
I got you.
Nice.
We only pull the freshest.
Warren Buffett said our goal is to find outstanding businesses at sensible prices, not a mediocre business at a bargain price. Foot Locker is a mediocre business. It does have its cool factors though. In my last video, I explained why $13 is the price for 50% margin of safety. Foot Locker stock crashed 35% Wednesday to $15 a share after the sporting goods retailer swung to a loss. In Q2 lowered its full year guidance and suspended its dividend to save cash. How low can Foot Locker stock go? What is a better investment? Nike stock or Foot Locker stock? I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here and you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit, like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you? I listened to the Foot Locker conference call, and what's my current assessment of the global economy and financial markets? Right now, I think the global economy is as close to being in a recession as it's been pretty much since 2008. The differentiating factor is that the Federal Reserve is not about to launch zero interest rate policy for the first time, and China is not about to spend enough money to pull the rest of the world out of its global recession. This is the differentiating factor between 2008 and now. This is why we see retailers being robbed. The news comes a day after a disappointing report from rival Dick's Sporting Goods, which that company blamed on a spike in shoplifting. That is what they called shrinking. Our second quarter was broadly in line with our expectations, despite the still tough consumer backdrop, said CEO Mary Dillon.
Softer customer demand than anticipated and elevated inventories. I want to reiterate, though, I am extremely confident about the lace-up plan.
However, we did see a softening in trends in July and are adjusting our 2023 outlook to allow us to best compete for price-sensitive consumers, while still leaning into the strategic investments that drive our lace-up plan, she said, referring to the strategic plan outlined at a March Investor Day.
And it will continue to grow. We have about 16% today sales online.
The company lowered its full year guidance and now expects adjusted EPS to range from $1.30 to $1.50, down from prior guidance of $2 to $2.25. It expects sales to range from down 8% to 9%. versus prior guidance of down 6.5% to 8%. The company said it's pausing its quarterly cash dividend beyond its recently approved October payout to conserve cash for strategic investments. We intend to update the market on our go-forward capital allocation plans and the timing around our longer-term financial targets when we report fourth quarter results, said Dillon. Gross margin fell to 28% in the second quarter, driven by a rise in promotional activity, which included higher markdowns, as well as occupancy, deleverage, and higher shrink, meaning higher level of Grand Theft sneakers. Shrink, a factor emerging in many quarterly earnings from retailers, can include damaged goods, but increasingly refers to shoplifting, which companies say is frequently being conducted by organized gangs. The issue is costing companies in the retail sector billions of dollars a year, according to executives.
This is very similar to what we saw with the reaction to Dick's Sporting Goods saying it was because of theft and shoplifting that was taking place there.
I mean, yesterday when we were talking about shrinkage, I mean, who came up with that? McKinsey or something? Shrink? I mean, what's wrong with theft?
Because it's more than
theft
just
is a good word.
Theft is like the stuff that's happening behind
Well,
the
it's
scenes.
more than
It's
just
also
shrinkage.
But it's
shrinkage
also
doesn't describe what it is at all.
No, shrinkage, you have less of the stuff than you came in with.
Stealing, theft, and shop. Use a couple words.
And it's damage. But yes, shrinkage, nobody knows what it is.
But it's also employees who are stealing the stuff.
Yeah.
Stealing. They're not shrinking the stuff.
Dick's on Tuesday blamed its poor earnings squarely on the issue. Organized retail crime and theft in general is an increasingly serious issue impacting many retailers. Organized retail crime was significantly higher than we anticipated, said CFO of Dick's Sporting Goods. Foot Locker's stock has fallen 59% in the year to date, while the S&P 500 has gained 14%. Why do we have broad market going up while the consumer discretionary retail is suffering? Well, on the fiscal side, we have a wartime deficit in a peacetime economy. We are seeing the vestiges of the infrastructure spending on semiconductor chips, AI chips. That's a 12 to 18 months lag. That's why we are seeing more stability than we would otherwise right now in the economy. There will be a lag effect to the Inflation Reduction Act spending, which is the next big level of fiscal stimulus. We hear about it. The government is spending it, but we are not seeing it manifest yet in the US economy. When we are pumping wartime spending level like $7.6 trillion into the economy on a trailing 12 months basis in 2020, as opposed to what we're doing right now, $6.7 trillion according to Bank of America data. In lockdown 2020 times, the $7.6 trillion was bypassing the banking system and going direct to households' checking accounts. That ignited real inflation in 12 months' time. People are buying everything in sight, from luxury handbags to Nike sneakers. That's how you get Foot Locker stock to go up to $60 a share while paying a fat dividend. Foot Locker stock hasn't been traded below $15 since the double recession of 2011. Interestingly, you can buy the same shares of Foot Locker stock for the same $15 price all the way back to 1989. Hopefully they paid those investors dividends all the way, because doing nothing for 34 years, that's very bad stock and stagnant business. Even if they are paying 7% annual dividend, that's still underperform of S&P 500. Well, as Nike stock has way outperformed the market since 1989 by 10,000%. We are seeing today, though, it's going to go through companies and eventually to the end consumer, many of whom are going to be unionized employees. It's not going to have the same immediate, direct, and efficient impact for fiscal policy transmitting to inflation. That's why I am still remaining cautiously bullish at this time. I think Nike stock is a better buy than Foot Locker if you're into the sneaker culture, because now it's the sneakers deflation season. Nike stock tumbled for the 11th day in a row after Foot Locker reported dismal quarterly results, and consumers continue to pull back from the sneaker giant. This is the longest losing streak in Nike's history as a public company since its IPO in 1980. Nike stock is forming a head and shoulders pattern. If it plays out, it can be scary, but a huge opportunity to add to bags. It is widely considered a best-in-class retailer. Its bread and butter is the shoe business, which has faced pressure for several months. Does Nike stock have a moat? Yes. Nike has a huge moat and scale. Gross margin remain above 43%, profit margin around 10%. Revenue is still growing year after year. Balance sheet is good. Free cash flow yield is at 3.2% at $98 a share. Still a little higher than the fair value. No margin of safety, of course. Jeremy has already started to buy way before this 11-day losing streaks. Right now, the 10-year yield is at 4.2%. Of course, that's not risk-free either. Don't believe it when they tell you that it's risk-free yield. Any bonds has inflation risk. China's uneven recovery could also be weighing on Nike stock. The retailer does about a third of its business there, and its business could suffer if the economy slows. Well, it is slowing. China is in deflation, just like the sneaker deflation season. I don't want to get too bearish, so I think Foot Locker has reached a bottom yesterday for now, because I don't expect a 2008 level of financial crisis to happen until 2025.